I've told you guys, there's 4, possibly 5 sectors that are going to see the biggest growth coming out of coronavirus, right? And instead of picking stocks, you can always pick ETFs. Find the ETFs, find the holdings, which ones you like, and ride those. Because if you take one online retail stock and it falls, you're f***ed, right? But if you take a total ETF on these, it gradually goes up, and one falling on bad earnings or bad news isn't going to bring the whole ETF down.
Bear gang till I die, ho. Swooped up the homies and we about to start a sideshow.
Let's say you were wanting to do ETFs, right? You want to diversify, but you want to do ETF. Why ETFs? Well, instead of chasing specific stocks, you can buy an ETF. What is an ETF? Okay, it's an exchange-traded fund, all right? What is an exchange-traded fund? It is a bundle, okay? An ETF is a bundle. Okay, it's a bundle. It's a bundle of stocks, okay? And so in an exchange-traded fund, you basically have a bundle of stocks. So let's say it's tech heavy. They may have Microsoft, and they may have Google, and they may have Nvidia, and they may have I don't know, fucking anybody. It could be anybody. Let's just throw it out. You put even Facebook could be put in tech, okay? So now, why would you want to go with an ETF versus those specific shares? Because you protect yourself from the risk. And what is the risk? Well, if Google goes down 5% and you're in Google, you lost 5%. But if Google goes down 5% and the rest of these don't go down and Google only makes up 10% of that bundle, then you only lose 0.5%. Okay, so it negates the losses, but it has an inverse. If you're okay with risk, it also can hinder you, because if Google goes up 5% and these all stay flat, you only go up 0.5%. So you're kind of leveraging yourself, not leveraging yourself, but you're kind of keeping yourself protected, okay? But you're also hindering potential growth. But if you're a long-term investor and you're somebody who just wants to, Stocky, I don't want to learn I don't want to know all this stuff. I don't want to figure out what stock A is doing to stock B and stock D, and I don't have time for that. I don't care about that. I just want my money to grow, okay? And I want to have some protection. All right? So then what you're going to do is you're going to find ETFs. So what kind of ETFs are there? Well, you have tech ETFs, right? Tech ETFs. All right? And what are those? Generally, those are the Qs, okay? Which basically tracks the NASDAQ. So it takes a bundle of different tech stocks and puts them together, okay? So if you're very bullish on the market, like let's say you bought an ETF 3 months ago towards the bottom, right? And you bought QQQ. You beat every other ETF because tech has been driving this. However, there's also risk there, because if there is a market pullback, tech usually goes the fastest. They make the most, they go down the most. Let's say you want a total market fund and you don't want to be too heavy in tech, but you don't want to be too heavy in a specific sector. You want something total. I personally have VU. So a total market fund, total market ETF for the S&P is VU. Now, I generally have had most of my long-term low risk, sustainable growth money in VU, because it's a Vanguard ETF that they pick from the S&P, and it has very low management fees. Which means I'm not paying a lot of money just for them to hold the money for me, right? So, I like VU. Now, there's others out there. You have VTI, you have VVI or IVV, whatever. There's so many out there, but this is just me personally. Or you could do the other one that we've been playing as a community, which is a solar ETF. Now, I went on a lot of rants about solar, last year, about how the market's all about pricing in the future, and the globe is, the people around the world are moving away from fossil fuels and moving to more, green energy, and the most cost-effective right now is solar. So instead of playing different specific solar companies, I bought into TAN, and that's called TAN. And I got into TAN last year and played it all the way until I liquidated in February, and I've been playing again since 2750, and I've made an ungodly return. We've made like 70% return on this ETF. You could do MJ, which is marijuana. Not a winner, but there is that. There is what's the name of the video game ETF, guys? Hero. Okay, so basically, an ETF is an exchange-traded fund. It's a bundle of stocks. And if you want a specific sector, but you don't want to find each stock, and you're very long-term on that sector, you just buy an ETF. Now, the counter-argument is, but Stocky, all I keep hearing is ETF bubble. Is there an ETF bubble? You're goddamn right there is. But is there a housing bubble? You're damn right there is. Is there a tech bubble? You're damn right there is. Is there a debt bubble? You're damn right there is. So the question is, do you wait for that bubble to pop? And even if it does pop, what if it goes to right here? But you never got in here. Or what if it does this? Stocky, nothing would do that. You sure? Take a look at the SPY chart over the last year and a half. These people are still waiting for that bubble to burst. At what point do they stop waiting? I told you it was gonna happen. I told you it was gonna happen. Y'all should have listened to me. You should have listened to me. I told you the bubble was gonna burst. I told you. Okay. Cause I'm still up 300%, and you've lost 3% every year in inflation, so you're actually down 30%. And I'm up 300%. Okay. So if you want to diversify, but you don't want the stress of figuring out positioning, don't do this, but you could go 30% QQQ. Higher risk, higher potential gain. 30% VU. 30%, well, you might have missed the boat now, but let's say TAN. Okay. And you can put 10% in fucking great divvy stocks like TMO, Johnson & Johnson. Okay? Let that shit pay for itself over the next 20 years and then just give whatever money comes from this to your kids or whatever. You know what I mean? Or you could go real risky and put 10% in swing trading, right? Well, Stocky, I want to be smart, but I want to have fun. Okay. Take 90%, put it in ETFs, take 10% and fuck around with it. And then if you listen to the 10-10-10 rule, 10-10-1 rule, wait a second. This is all coming together. All his shit he talks about is coming together. High risk, high reward, medium risk, medium reward, low risk, low reward, right? Well, not technically, it's 70% up, but let's just say that's how you do it. Now you take 10% of your portfolio because you want to have some fun in day trade. Well, guess what? Never put more than 10% of your portfolio into a single position. Never lose more than 10% of that position. Therefore, you never lose more than 1% of your portfolio. I would say look at sectors that you see as a post-COVID world, and where that's going to go and who is the leader in that sector or who is an up-and-comer in there. You know I'm big on Microsoft over the next 5 to 10 years. PayPal over the next 5 to 10 years. FLIR for me is completely speculative, so it's not a good buy for like a smart buy. You've got cybersecurity. You've got cloud storage, data. You've got looking at microchips. Honestly, if it wasn't for the fact that we were on such craziness ahead of the election, my ass would be buying semiconductor ETFs, SOXX right now, SOXL, SOXL, if you're a complete DEGN. But here you go, a semiconductor ETF. I mean, think about it. Rather than trying to pick which semiconductor, we all know that people are going to be home. They're going to be upgrading their computers, rebuilding their computers, buying new computers. Okay, businesses are going to have to put more storage, more data for work from home, more security, all that stuff. And semiconductors, right? Plus, you've got semiconductors in so many other ways. Now, this is the non-DEGN version, okay? I mean, look at this. Just since 2019, even with the crash, 121%. Since the crash, okay, had yourself a nice 88%. Now, if you want to be completely degenerate, I didn't show you this. I did. Before I click on this, boys, ain't no snitches in chat, right? This is a 3-time leveraged semiconductor ETF, okay? just since March, 470%, okay? Just since the dip in February, or last month, okay? 36% this week, right? Okay. This thing ran 378% just in 2019. Okay, just in 2019 to the crash, okay? In 1 year, 413%, okay? Now, what you need to understand is this is 3-time leveraged, so there is some decay if you hold long term. Number 2, if there's trade war or there's a tech drop, you're fucked, okay? But if it is bullish, coming out of this, and semiconductors continue to go up, and you got NVIDIA and AMD and Intel and all those boys, all I'm saying is it might be something you want to look into, but understand this is high risk. This is the kind of shit that will get you wrecked, okay? Just go buy Sedge and Sed. Look at this. Remember selling this at $36, guys? Because it's a lot to go into. Like, you've got, I have my list. You know, you have QQQ, VU and SPY, the IWF, which I think is a big sleeper. IWM, not so much. VXUS is the international index fund. And then you've got the MSCIs, ICLN, TAN, and FAN, ARKG with the you know, genomes, ARKF for fintech, ARKK with disruptive companies for the broader market, the XLs, cloud computing with SKYY, which I think is underrated. And then WCLD actually has a great performance, but has kind of been slower. But for those of you guys that are looking for stuff coming out of coronavirus and you're big into cloud, WCLD, right? They have Zoom, Plan, CRM, Crowd, ZEN, Workday, TENB, PCTY, DDOG, and BL all in there. So if you're like a total cloud computing, because that's one of the sectors we think are going to be the biggest growers coming out of coronavirus, especially with so much work from home and so much digital stuff going on. Cybersecurity, hack is a good one. These are all, remember we've talked for the last several months about the sectors coming out of coronavirus that are going to be the strongest. Okay? So there's 5 of them, but hack no, we're not hacking, but hack in cybersecurity, because we all know cybersecurity is going to come in big with so much digital, the digital space and so much e-commerce and work from home and you know, private things, whatnot. 5G, you have 5G, FIVG, or whatever you want to call it. Semiconductors. SOXL is the 3-time leveraged ETF that you guys know. SOXX, SOXX, is the semiconductor non-leveraged if you don't want to take as much risk. Online retail, IBUY. This is another one right here. Since we're moving into online retail, here you go. Look at this. These are all ETFs that we've talked about at one point or another. Okay? You can literally find, when people always ask me, they say, Stocky, how do I invest in a stock coming out of coronavirus, or what do I do now? And I've told you guys, there's 4, possibly 5 sectors that are going to see the biggest growth coming out of coronavirus, right? And instead of picking stocks, you can always pick ETFs. Find the ETFs, find the holdings, which ones you like, and ride those. Because if you take one online retail stock and it falls, you're fucked, right? But if you take a total ETF on these, it gradually goes up, and one falling on bad earnings or bad news isn't going to bring the whole ETF down. I mean, if you guys like self-driving electric vehicles, iDrive, here you go. Self-driving ETF for those of you guys that want to play it. It's only been here since April. Well, it came down in April. I mean, there you go. I mean, there's ETFs for everything, guys. These are bundles of stocks. So if you want to invest in specific ETFs or sectors, but you don't know which stocks to pick, that's the beauty of it. You don't have to. What about healthcare? FHLC is one of them, which a lot of people think healthcare is going to be a big winner coming out of this. They still got room to run up. I mean, there's a lot. Have you guys looked at ROBO? So there's a lot out there, guys. I mean, you can always look at ARKW, because if you guys are big Tesla people. Next generation internet ETF. How about that? How about that? Next generation internet ETF with Tesla as their top holding. This is like this community's #1 ETF. I don't know. It's just funny. There's a lot of ETFs. That's why I tell people, find an ETF. If you want to be a passive investor in something that you believe is going to grow, rather than just picking one company, why not just pick the sector?
Yeah, ARKK is disruptive companies. It's kind of the same thing, but different holdings. Yeah, ARK ETFs do have high expense ratios. That's not my job to go through. I just give you guys the stuff. And then you have emerging markets as well. There's a lot out there, guys. I'll try to, oh, what about this one? This will be a good one. VIRS. The Pacer BioThreat Strategy ETF. There you go. They just opened during coronavirus. There's something for everyone. That's why I say investing is not that crazy. You just got to know what to look for. And that's what my job is, to bring it to you guys. They knew? No, this was after coronavirus. This came out after. How about the work from home ETF? What's their holdings? What are their top holdings? Twilio, which just got an upgrade, and but you guys made money off that at the morning call the other day. InCG, CrowdStrike, Zoom, Okta, Ping, Box, Fortinet, Amazon. Look at that. That's their top 10 holdings. Can I make an ETF? My ETF would be a lot different. Know any good solar ETFs? Why are you the way you are? You guys already know what my emerging, or not emerging, my I would have different ETFs. I would have my you know, DEGN for DEGN. Is that an ETF? Hold on, let me make sure it's not, so I don't get sued. Damn it, DeltaGen. DEGN is not listed, boys. We're going public. This would be like Neo and avocados and fucking, you know what I'm talking about? No, if I were to do an ETF right now, it would be the BOMR for the boomer. And it would be Walmart, it would be Costco, it would be Microsoft, Verizon, Pfizer. I mean, it would just be basically my portfolio right now. And then in the DGen, I would definitely have the emerging ones. I would have like Pawn W, and I would have Logitech, and I would have a whole bunch of emerging speculative sectors. TAN would be in there. Yes, screw you.